Commodities and crude prices also took a knock after Trump put out that tweet as investors started worrying about the impact that this can have on trade and demand. Joining us now to talk about the impact of all of that and maybe possible long-term impacts, if at all, on crude is Peter McGuire, Chief Executive Officer at XM.com. Peter, good morning to you. Niraj here. How do you look at what could happen to crude? We have the immediate impact that we've seen already. Can this bring about further pressure on crude prices?
Well, good morning, Niraj. I mean, it was just a massive hit when you're thinking about, the severity of it, an 8% fall, the largest fall in over 4 years. That gave us some sort of impact. And not only that, I think, there's every chance that you could see a further washout from here. It's taken the market by surprise. We all know, and going on Jodi's discussion there, as far as what transpired this week in Shanghai, there wasn't a lot of traction. Trump saying, well, look, it's not moving quick enough. And so in turn, he's imposed these new tariffs starting 1 September. It'd be interesting to see if he ratchets it up even further from here.
So then my question to you, Peter, is what is the worst case scenario that you see for crude prices if it is ceteris paribus, which means all of this remains as is and there is an expected retaliation from China? What do you expect is the worst case scenario for crude prices as you see it right now?
Well, depending upon what China's rebuttal is, if they're aggressive and they take a similar stance, then I'm sure you're going to see a further weakness as far as the energy sector. That wouldn't be surprising, and it could happen, tonight in New York trade or certainly later in the day. Traders are very conscious of this, and it's very much a wait-and-see approach. We understand the weakness coming from Eurozone. We understand, Fed dropping rates this week. That just gives us some sort of indication as far as global weakness, and that could really impact the energy markets in the next couple of trading sessions.
Okay, Peter, just one follow-up. I know we were going to talk about crude, but just extending that question to other commodities as well, because I think base metals were a bit subdued yesterday. In all likelihood, could be subdued in the near future as well. Do you reckon that trend will play out there too?
Well, I think that probably it'll hit the base metals. I wouldn't be surprised. You may see a little bit of a washout there, a continuing washout. And that's not surprising because energies and, Dr. Copper and all of those linkages, though one surprises, well, not necessarily a surprise, but that strength that was washed over to the gold sector and precious. So, look, that whilst markets move, there's going to be some winners and there's going to be some losers, and traders have just got to be very mindful of that. Our trading, the trading market is, living on this by a minute-to-minute proposition because of, large markets and large washouts really impact, the global situation very, very closely.
Okay, Peter, one more follow-up to that. What's happened in the last 2 days, and especially after the Fed meet, is that the dollar has strengthened, which also plays its part in the weakness on the commodities. Now, my question to you is, while it may be due to the relative weakness in the other parts of the world as well, do you reckon that the dollar could strengthen further from these levels?
Well, I wouldn't be surprised because you only got to put your mind back to the last, say, week and a half, and we were at 96.50 approximately for that US dollar index. We're now at 98.30. There's every chance you could see 100. I wouldn't have thought so. I really would have thought if you're going to see that weakness as far as Fed slashing, it's cutting that 25 basis point cut and further talk from Jerome Powell that, there'd be another one possibly this year, then I would have thought that the US dollar had come under a little bit further weakness. But the way it's looking, it's strengthened, and why can't it take that 100, handle out? So the upside is there, the potential is there, and I think it's very much, again, what happens as far as President Trump. So watch out for Trump, watch out for Twitter, and watch out for, volatility in the market.
I like that. Watch out for Twitter. Well, that's the fastest way to get information these days, especially from Donald Trump. Peter McGuire, thank you so much for taking the time out and speaking to us.